Hi, welcome back to Trading Edge 360. Now we'll talk about how seasonality can give you the edge in uncertain markets. The next presenter is Alex Yeo, founder of Seasonal Vantage. Alex, thanks for being here with us.
Hey V, thanks for
Okay.
having me here. Just to check whether you guys can hear me loud and clear. Everything is good.
Yep, it's all good. For the audience who want to respond, just type into the chat.
Yep.
Yep.
So thank you so much. Okay, thanks once again. Thank you so much for being here and being on time today. My name is Alex, okay, from MarketWise Asia and also the founder of Seasonal Vantage. Hey, thanks, Christopher. I saw your comment. So let me just share my screen right now. Just give me a moment. So I believe you guys can see my screen, right? If you can see, okay, just type yes in the comments. So before I kickstart, everything is good. All right. Okay, thank you so much over there. Okay, so to my today's topic, okay, how seasonality can give you the edge in uncertain markets. So let's get started over here. Okay, just a disclaimer first. Whatever I share today, it is just for education purpose, not a recommendation to tell you what to buy or what to sell. Okay, so please do your own due diligence, okay? And before I kickstart, okay, maybe some of you might not know me. Okay, just a very quick introduction of myself here. My name is Alex. I am the founder of Seasonal Vantage, which I provide seasonal tools and data. I'm also with MarketWise Asia, where we provide financial and also trading events. And I've been trading the market since 2011. I'm a self-directed trader, trading my own funds. And I'm also a certified financial technician, which means that I'm a qualified technical analyst. I'm also the co-author of this book called The Trader's Blueprint, which is the Kinokuniya bestseller over here. I'm not sure whether you guys can see over there. This is the book I'm holding on. It is a physical book over here. And yep, you can see here, this is, we rank number 2. So you can see we rank alongside, okay, Skin the Game, which is by another famous author, Nassim Taylor, and also the Bible of the value investing, the intelligent investor over there. So I'm quite happy that, we got number 2, not number 1, but we got number 2. I think that is very good enough for us, okay? All right, so as I mentioned, okay, I spoke at events as well. So you can see on the left-hand side, we spoke at physical event, and on the right-hand side, and typically every Monday, okay, I have been doing this public live stream, okay, since COVID times. First COVID, we are stuck at home, nothing to do, cannot do anything. So I started my live stream. I think it has been around 4 to 5 years already. So been doing that for the past 4 years, 5 years, and every Monday evening at 10:30 p.m. over here. Okay, so if you're interested, you can follow us on social media. So just get notified, especially on the Facebook and also the YouTube. So because my live stream is broadcasted to both YouTube and also on Facebook as well. So just scan the QR code or just visit the link over here. Okay, so today's goal, okay, this is more important. I'm going to show you a proven data-backed way to time your trades better, even in unpredictable market, especially ever since, Trump, okay, is being a president right now. Every single day, there could be some, funny news from him, there could be some reaction to the market as well. So today's goal is to show you how to time your trade better, even in unpredictable markets over here. Okay, so let me just ask you a question. Okay, I hope you can participate with me. Okay, for those who are inside this room right now. Okay, the market is unpredictable. Okay, what do you think? Is the answer true or false? If it is true, just type T in the comments. If you think it is false, just type F in the comments over here. Okay, just a quick one over there. Okay, John say true. Okay, anybody else? Because I'm only the person speaking in the room, okay? Do engage with me, okay? At least entertain me a little bit, okay? All right, Ken? So Roger say true. Okay, so I believe most people will say true. The market, it is unpredictable. Okay, yes, to a large extent, like I say, okay, that could be black swan event. Okay, that could be, so-called news or maybe war events, a lot of these are war events that is unpredictable. Okay, that is true to a certain extent. And for example, Trump, okay, every other single day you do some things on the tariff and the market will react. Okay, it is true to a large extent. Okay, But, okay, what if I told you there are parts of the market that are predictable and have been for years or even decades, that keeps repeating year after year, even, okay, during news event or world event, or whether there's war, okay, and after when the market normalized, they tend to repeat year after year. Thanks, Christopher and Kashim, for your reply. Okay, so for example, over there, okay, Microsoft, okay, 11 years, 100% track record, pun intended, because the event organizer, it is track record, okay. So it has a 100% track record, okay. You can take a screenshot, okay, if you wanted to. All right, 11th of June to 23rd of July. In fact, that is only just recently only, okay, just recently only over there. 11 years, 100% track record, okay, just to share with you some charts over here, okay. This is latest 2025, okay, and especially after the April sell-off, the so-called the Trump Liberation Day, okay, after the June, after the April sell-off, that was the low of this year, and after that the market just kept going higher. So for this year 2025, can you see that from 11 June to 23rd July, okay, not exactly like 11 June to 23rd, maybe plus minus 10 or 9, because in certain years it could be a weekend, but generally, okay, 11 June to 23rd, you can see this year it typically went higher. So this is the favorable golden period for Microsoft. All right, so for 2024, last year was also a bullish market as well, okay. You can see that, you know, from 11th of June to 23rd of July, it generally went higher, okay. But of course, you can see that, you know, towards the last part of the favorable period, it had some correction, but overall, you can see that the opening price, it is still lower than the closing price, which means that the closing price is still higher. So which means that it is still positive, okay. Again, you know, there are a number of ways that you could enter. Okay, I'm a little bit ahead of myself here, but you know, you don't have to really just trade or hold on until the end of the period. So if you're doing shorter term trading, swing trading, holding a few days to 1 or 2 weeks, you know, when your reward to risk ratio, it is good enough for you, you could take profit here, you can do profit here, you can take profit here. It's entirely up to you. Okay, you can see that 2023, okay, it is a little bit more choppy over there, but you can see that over here during this period, 12 June, because 11 June was a weekend, Sunday, 12th June to 24th of July, it generally, you know, went higher as well. Okay, and 2022, okay, I'm not sure of how many of you here know exactly what happened in 2022. Can you remember, is 2022 a bull market or a bear market? Okay, if it is bull, just type bull in the comments. If it is bear, just type bear in the comments. Anybody can remember or not? Okay, I'm not going to waste your time here. Okay, I've just to recollect. Okay, your memory. 2022 was actually a bear market. If you don't remember, just check the S&P 500. Okay, if you can't remember, but you can see that even though it was a bear market, okay, you can see that, you know, overall June was a weaker period over there, but overall, okay, it still closed higher than the opening period over there in 13 June. So overall, it still goes higher. Okay, 2021 after COVID, needless to say, okay, I think most of us still have fresh memory. Okay, after COVID, it was very bullish. So 2021, you can see over there, 11th of June to 23rd of July, it also generally went higher. Okay, so what I'm trying to say that, okay, this isn't luck and it is not hindsight. Of course, along the way, okay, you know, during the number of years I mentioned over there, there could be some news event, you know, there could be some so-called events or news or some whatever things, like, okay, along the way, but we might have forgotten about that. But generally, okay, the price still goes higher. Okay, so it is a pattern that is repeated with remarkable consistency. Okay, so now imagine if you knew about this in advance and not after it has happened. So imagine, okay, right now, I think for next year, okay, maybe not exactly the same, but there's a very good chance that next year, okay, this timing, okay, this seasonal data will repeat again. So which means that, okay, in advance, which means that, okay, next year, okay, at the start of June, you might want to get ready to position yourself, okay? Maybe not enter blindly, okay, but position yourself in early June, okay? Hey, I'm going to look at Microsoft, okay? I remember Alex here last year, okay, June was a golden period. So I might want to look at June, okay? Somewhere June, I'm going to look at that in early June, okay? After that, in 2022, okay, there was a pullback over there. Okay, so we are now almost at around mid of June. Maybe you wanted to, keep it in your watch list. That's what I'm trying to say over there. Okay. So this repeating tendency, it is actually called seasonality. Okay. All right. Seasonality, you can call it seasonal trend. You can call it seasonal. Okay. I think it is all the same. Okay. So seasonal trend, it is the tendency for stock sector or other asset classes, could be forex, futures or commodities, okay, to show consistent price behavior during specific time of the year, okay, based on historical performance. Typically, I like to see at least above 8 years and above, okay, 10 years and above, that's the best. So year after year, it keep repeating the same price over there, and the price behavior. So example, like I said, during the Microsoft example, during June period, it tends to be very bullish, okay, based on during specific times of the year. So why does seasonality works? You may be asking. So there's a myriad of reason why it works. Okay, it could be due to earnings. Okay, or psychology. Okay, or cycles. For example, like crude oil. Typically during the U.S. Summer holiday, the summer season. Okay, that's between about June to September. Okay. Summer, okay, there's less demand for oil. So typically, okay, generally in June to September, the price of crude oil, okay, commodities, it tends to go down lower, okay, in price, okay, all right. It could be weaker in price, okay, doesn't mean that you're going to crash, okay, or could be due to fund flow, okay, like what the institution are doing and such, okay. Psychology mainly because, for example, you might have heard of Santa Claus rally. Typically in November and December, the market tends to be very bullish. It could be due to because, okay, consumers, they get their bonus, they have more money to spend, holiday, Christmas, they buy more gift. That actually cause to cause the economy to be so-called in a better mode. Okay, people are spending the money, etc. So there could be many reasons. Okay, but the key thing is, okay, we don't need to actually know the reason, okay, as long as it works. Am I right or not? Okay, all right. So another seasonal pattern that I want to share with you guys over there, okay, this is what is this? Okay, all right. So I'm getting a little bit quiet over there. Okay, what do you think this is in the chart? Okay, share with me in the comments. Why is this in the chart? Okay, I would really appreciate that if you give me some comments over there. Thank you, Kashin. Okay, fantastic. Okay, this is gold, right? Gold bars over there. So you might want to take note for gold over there, another seasonal patterns over here. So let me share with you, okay, for the past 13 years, okay, it is a pretty good track record over there. Again, 100% win rate. So you want to take note of that, okay. The golden period, the favorable period, okay, it is actually from 9th of January to 2nd of February. About 1 month of this favorable window over here. Okay, I won't go through all the charts over there, just to share with you a few, just you get the idea, same as the Microsoft chart over there. So this is this year, 2025. This year, okay, I'm not sure whether you're aware, gold has been pretty bullish this year, okay? And it is also in line with the favorable seasonal period also. You can see over there, 9th of January to 3rd of February over here, okay? It went higher, okay? It went higher. So it was a very solid bullish trending market for gold this year. All right, so you can see that in 2024, okay, market, it is a little bit choppy, but during this period, overall, the closing price was actually still higher than the opening price over there. Not by a lot, okay, but it still went higher in 2024. In 2023, it was also a very good period for gold as well. You can see over there 9th of January to 2nd of February, okay, typically about 1 month, this golden period. So you can take a screenshot on this, I think, to have more example. No, so you can take a screenshot for those who just joined, okay. Once again, it doesn't mean that it is going to repeat next year, 14 years, 15 years, okay, but it does tells me that, hey, okay, I know this period, okay, maybe I want to take a closer look into gold around this period. So which means that, okay, come next year, at the start of January, you might want to look into gold. Okay, of course you don't just blindly go in. Okay, around the start of January, you want to position, prepare, and plan for the trade already. Around here, okay, 24 around here, okay, you can see there's a pullback. You want to plan your trade somewhere around here, okay. For example, okay, in 2023, okay, is choppiness. Then after that, there's a little bit of pullback. You want to plan your trade already. So you know exactly what to keep it in your watch list. Okay, so the key is, okay, knowing these patterns before they happen. That's what I mentioned. So you can plan, prepare, and trade with confidence. I'm not sure about you, okay? You know, when I have the seasonal data with me, okay, I know the data. So I know exactly what stocks, what sector, okay, what industry, or even the index, okay, I can plan, okay, I can prepare myself, zoom in at the specific time of the year, okay? So I know exactly what to look out for. Okay, so you might be asking, hey, you know, Alex, you know, all this you say about seasonality, okay, it sounds too good to be true, okay? Just using the dates and such, does it really work? Is this what you say only? Is there any proof? Okay, let me tell you, okay, you don't have to listen to me, Alex, over there, okay? I'm not that smart, okay? I'm not that good, but it has been proven to work, okay? All right, so again, like I said, you don't have to listen to me, okay? Listen to the smarter people out there who have already done all the research. So does seasonality really work? Okay, so this is on the financial journal over there by the Journal of Financial Economics. Okay, the seasonality in the cross section of stock returns. This was published in 2008. All right, so just want to explain certain things over there. Okay, seasonality, I think you know right by now. Stock return, okay, I think you also know. But it is, what do you mean by the cross section? Sometimes, you know, the smart people, they tend to use very, you know, complicated words to sound smarter, but it is actually not that complicated. Okay, cross section, okay, just means that they research a whole spectrum of stocks, which means that they research on many stocks. Okay, that is what it means by cross section of stocks return. All the different stocks out there, okay, in the market, okay, can be other countries, okay, and such. All right, so they've discovered that stocks tends to have a relatively higher or the reverse low returns every year, okay, in the same calendar month. Okay, it could be stocks like, for example, in Microsoft example, in June, and in gold, typically every January period. So this is just part of this favorable date over there. So it could be, you know, in January, in April, and in December, there could be different dates altogether. Okay, they tend to have high or low return every single year, okay, in the same calendar month. So this is from one journal. The other one, okay, return seasonality basically is telling you what is the return, okay, if you trade or invest based on seasonality. So this was published in 2013, okay. So it says that the summary, a strategy, okay, that selects stocks based on their historical same calendar month, okay, returns an average return of about 13% per year. So I think the index just give you a return about slightly less than 10% or 8 to 10% thereabout, okay, if you invest in the index, the S&P 500 and such, okay. But if you choose a strategy, okay, that select stocks, individual stocks, right, okay, the return is actually higher at about 13% per year over here. Okay, another one over there, this is global factor premiums over there. I think that global, you know, okay, factor as a single English word, you know, premiums as a single English word, you know, but add together, you might not know, okay, what does global factor premium, because I have been talking some of the talks over there, people don't exactly know what it is. Okay, I'll just do a very simple explanation. Global, which means the whole world. Okay, factor. Okay, what does factor means? Okay, let me just explain it using an analogy over there. Okay, I'll ask you. Okay, what are the factors that cause high blood pressure? This one you know, right? Okay, this one is very simple. Or maybe you say, oh, because of your unhealthy diet. Okay, diet caused me to have high blood pressure. My weight. Okay, I'm obese. Okay, caused me to have high blood pressure, or because of my family history. Okay, there's the genes. Okay, the genes cause me to have high blood pressure, or it could be your habits. Okay, smoking, one of the factors to cause high blood pressure. So all these are the factors that cause high blood pressure. So what are the factors, okay, that cause you to have premiums, that cause you to have to outperform the market, okay, basically to be profitable, to cause you to outperform the market, okay. So based on this research, okay, that is written on 2021, okay, based on the paper, 5 key studies, okay, that examine these factors, okay, the major factors are actually trend, okay, momentum, value, carry, return, seasonality, okay, and BAB. BAB means bet against beta over there, okay. I think that most of you can understand this, okay, value, which means that you buy value stocks, okay. It can cause you to outperform the market, okay. Whatever your definition, it is value, okay. It could be like the Warren Buffett, okay, at the initial years, he bought into value stocks. That's why the term value investing come about. So if you buy value stocks, okay, it will cause you to outperform the market. If you buy into trending stocks, it will cause you to outperform the market. If you buy into momentum stocks that have good momentum, okay, it will cause you to have outperform the market, okay. And one of the other one, it is seasonality, okay. If you actually zoom into seasonal stock, okay, it will also cause you to outperform the market, okay. Do you guys understand what I'm trying to say over here, okay, on this global factor premium? If you understand, okay, just type yes in the comments, or just type letter Y in the comments, so that I know I can continue to move forward over here. All right, so let's continue over here, over there. Thanks, Vincent, for your answer over there. So how do you actually use seasonality? Okay, how to use? Okay, so I've talked so much about using the data, the seasonal dates, and such. How to use? Okay, so because there are many stocks that are actually favorable during this period. So how to actually execute it? Okay, so first there are 3 steps to do. Okay, very simple. Number 1, you identify, okay, which are the stocks or the sector or the commodities or the other asset classes. Number 2, you filter out these stocks. How to filter, I'll share with you later. And number 3, how to execute it. So basically, 3 steps: identify, filter, and execute. All right, so how to identify the stocks? So you need to find the high probability setup over there. So you need to have the data over there, look for stocks, ETF, or whatever sector or commodities, okay, with a strong historical tendency, okay, to move in a certain direction during specific days. So I prefer to actually do the bullish market. You can also do the bearish market, okay. So, but I generally like to find bullish stocks with historical bullish data. So use at least 10 years of data to confirm that the pattern isn't a fluke. I prefer to use 10 years or above, okay? But if you only have, I think, 8 years, I think that's also good enough, okay? I think 8 years, at least 8 years is good enough, okay? And the key metric, okay, a win rate, okay, between 80 to 100%, okay? Generally, okay, I prefer to use data that have a 90% track record or win rate, 90%, okay? All right, so because I try to filter down as many as possible, okay, 90 to 100. So, but I think 90 is good enough, 90%, okay? You can sort according to the average return and number of years tested. So the best is more than 10 years of data with at least 90% track record, okay? All right, average return doesn't matter so much to me. All right, so then you filter. So again, there will still be many stocks out there. So you need to refine the list. So you're only looking at the best candidate right now. So you can use different technical filters. Okay, this is not within my scope because I know here some of you here might be experienced trader. You have your own setup, you have your own so-called technical way of trading. You already so-called ingrained with your way of trading. So you don't have to do any other drastic changes. Okay, but basically you just need to use what you are already using, some technical filters to avoid setup that are already either overextended or in a downtrend. Okay, so if you are looking at bullish stocks out there, so if the data is showing you the bullish stocks, for example, over there, you might want to add in a filter. Okay, the price has to be above the 50-day MA. MA stands for moving average. Okay, so if you're already trading, most likely you know what's MA, moving average. Basically, is to filter out. Okay, above price. If above 50 MA, generally it means that it is in a midterm, it is in an uptrend. So you want to in line with the seasonal trend. Okay, so whatever other filters, for example, you can do relative strength, etc. Not the indicator, not the RSI indicator, but the relative strength, whether this stock is stronger than the current market right now. Okay, this is what I meant. Okay, if you don't understand, it doesn't matter. Okay, or other filters could be like pullbacks. Okay, it is having a pullback, generate uptrend. You want to buy into pullback because you don't want to buy something that's very overextended already. Okay, all right. So by having a filter, this step actually remove, okay, good in history, okay, but bad right now setup. So which means that, you know, even though the data shows that it is within the favorable period, but for example, the stock has already moved a lot already. Okay, so you don't want to choose these stocks that has a tendency maybe to have a pullback once you go in. So you want to remove this good in history but bad right now. Okay. All right. Number 3, execute. Okay. So you want to turn this so-called seasonal setup into something that is more actionable into a trade plan. So once you have the so-called the stocks, okay, good filters, okay, how do you actually enter or exit the trade? So once again, okay, you might be already trading, okay, so you have your own way of entering a specific stocks and such. So you choose your own entry trigger. So basically you need to know how and when to enter. Okay, of course, if you are trading short term, okay, you need to define where to place your stop loss and profit target, okay, before entering. Okay, and of course, you need to manage the trade with a clear exit rule. So once you enter already, okay, how do you want to exit? Is it throughout the whole favorable period, or when the price hit a favorable, you know, reward to risk ratio, you want to exit? Okay, that's why I say exit at the end of the period or when target or the stop is hit. Okay. So case study over here. Okay, I'm not sure how many of you here are actually residing in Singapore or Singaporean. Okay, if you are actually residing or Singaporean, right? Okay, just type letter S in the comments. Okay, this one will be something of interest to you. So just type S if you are residing in Singapore or you are Singaporean over there. Okay. Thanks, John, over there. So this is the iShares MSCI Singapore ETF. Okay, the ticker symbol in the US exchange, it is actually EWS. It is actually a proxy, okay, for STI. Okay, similar but not exactly the same. I think this one include the C Limited Shopee. Okay, but the STI doesn't include the C Limited. Okay, so this is EWS. Okay, time frame. I'm not sure whether you are aware. Typically, the STI or the Singapore market, every year, okay, every year, August period, okay, at the start of the August period, okay, it tends to be bearish. Okay, so this is last year, 2024 data that I have, 1st of August to 24th of September data, 10 years, win rate 100%. You can see that, you know, actually I have a trading community over there. So, you know, I mentioned this, okay, somewhere just before August. Okay, you can see over there, this is what happened before that. And after that, okay, the market, Singapore market just dived down. So last year was actually due to the yen carry trade over there. Of course, with the news, this escalate, you know, the sell-off, etc. So I was also in that, I was actually in the Singapore market position. So it was a good shot over there. Okay, so this was last year. So how about this year? Okay, this year. So about the same period, 29 July to 29th of August. So when I first mentioned, price was somewhere right at the peak over there at the top. Singapore market was doing actually very well this year. This year is a good year for the STI. But you can see that, you know, comes August, okay, it tends to have a so-called a weaker period, okay, a weaker period there. So see, after that, price just went down. Of course, right now, if you're looking at the latest chart, price actually rebounded, okay, but actually come down. So, for me personally, okay, I don't have to hold on to the whole period, okay. I'm more of a swing trader. So basically, I hold for a few days to at most 1 to 2 weeks. So this is very, very good enough, okay, very good profit for me in terms of swing trading, holding for just a few days to 1 week or so. So it was a good profit. So I actually traded the EWS over there. So imagine, okay, you already know this data. So for me, like every single year, I will just camp there in late July, okay, I will camp there. So I will position myself, plan for the trade, okay? Is this useful to you or not? Are you aware of this data or not? Okay, if you're aware, just type yes. Why? If you're not aware, just type no, okay? So at least I know that this is something that is new to you here. Okay, so this is another case study, another example over here. So thanks, John. Okay, most of you say no, right? Okay, Brad say yes. Okay, so next year, most likely next year, it should repeat the same thing again. Okay, but again, it doesn't mean that 100% guarantee. Okay, there is no guarantee, but at least we can plan and prepare ourselves. Okay, you still have to wait for the trigger. Okay, we don't just blindly enter. The seasonal data is just another tool, okay, another so-called proven tool for us to use it, okay. All right, so I'm going to share with you, okay, where to find the seasonality data over there. So there are a few sources out there, okay. One of them, it is actually stock charts. Some of you might know. So stockcharts.com, okay, it will shows you the percentage of month, okay, a stocks or ETF close higher than open over a selected number of years. So what does it mean, okay? Using some chart will be easier to explain. So for example, over there, this is the percentage of months in the S&P 500, the SPY, okay, close higher than it opened from 2014 to 2024. So this is 10 years of data over here. So you can see over there, but of course, this is based on monthly data. You can see that typically, okay, May is a good month, July, it is a good month, okay, August onwards, average not the best of the month, but you can see that come into September, okay, historically, okay, at least for the past 10 years, based on this data over there, September, it is a weaker month. Weaker month doesn't mean it's going to crash, okay? It could mean that it could be ranging or just have some minor correction, or it could maybe means a huge correction, but typically it will close lower than it open higher, okay, in September. Okay, so we want to prepare for that, okay, and come into November, December. Typically November, it is a good month. So this is one way you can see the seasonality data. You could use for the indices. You can use in the other individual stocks as well. Okay, but I want to share with you the limitation over here. Okay, there's some limitation. Okay, so for stocks charts, for example, it only show the monthly data. So there's no precision on the exact, okay, the precise start and end of a seasonal window. But that's good enough, okay, if you want to have a so-called a kickstart, okay, you want to show a general trend of whether a stock or index is good or bad, okay, in certain months, okay. And you can't drill into specific tradable date ranges, like what I mentioned just now, only show the money data. There's no specific date range. So, and also, I think the more important thing is, okay, you don't know what you don't know. Okay, what do I mean by that? So you only how to say, you only know, okay, you need to know what stocks you are looking at. So for example, you want to look at SPY, you want to look at Tesla, you want to look at Nvidia. So you only need to know what you want to look at. So there are many stocks out there in the market that could have some opportunity, but you don't know. Okay? So you need to know what you know, okay, and you don't know what you don't know. So you must know what to search for, or you miss the hidden opportunities. Okay, all right. So before that, okay, I'm just share with you. Before that, before I know about seasonal data, okay, trading feels like a gamble. So I don't know whether you feel the same as well. Okay, previously or just scanning with no clear focus, chasing hot tips on social media. How it can be on Twitter, can be on social media, whatever it is. Okay, looking at other people, what are they trading? Give me some trade ideas and such. Okay, and you might be missing the big move until it is too late. Okay, for example, I'm going to share with you an example. The latest one, it is actually the United Health. Okay, United Health. So actually yesterday, I think after the news announced that Warren Buffett placed a stake in United Health, okay, And then actually at one point in time, okay, it moved about 14% higher, gap up 14%. Okay, so I'm not saying that it cannot go higher. I'm just trying to say that okay, you actually miss bulk of the move already. Do you know that actually United Health, okay, actually had a favorable seasonal period, okay, all right, 1 or 2 weeks before. So you position yourself, okay, you could have caught this breakout. I didn't catch United Health, but I caught another health stock, also a beaten down health stock called Elevant Health. And plus the options flow is already saying that, okay, there could be smart money, position yourself. So basically it is seasonality, okay, plus the options flow. So for me personally, I didn't catch United Health, but I caught another stock called the Elevant Health, also another beaten health stocks. So also based on seasonal data as well over there. So you getting whipsaw in certain markets. Okay, so all these are, if you don't use seasonal data, that is for me lah. Okay, at least for me, after I start trading, okay, using seasonal data, I'm trading with a better, a clearer roadmap. So at the start of every week, okay, I know exactly, okay, which stocks to focus on. Okay, I can identify higher probability window with historical backing. So I know all these stocks have a proven track record, okay, at least 10 years of data. So I combine, okay, with seasonal, okay, plus my own technical trigger for entry for precision. So basically, in short, I trade with more confidence. And it's not like, oh, I guess, I hope that this trade will work out. Okay. Of course, I'm not saying that every single trade will work out. Okay. I'll be lying to you if I say that every single trade is a winning trade. It is not. Okay. It is not. Okay. There will be losers. But I trade with more confidence. And as long as your reward to risk ratio it is better, okay, then that is good enough for me. Okay. So trade with a good winning so-called reward to risk ratio over there. Okay, all right. This is just the beginning over there. Okay, so what I've shown you today is only a small part of what's possible with seasonality over there. Okay, I have a lot case study, okay, set up example that I simply don't have the time today to cover in this short session. So today I only have 40 minutes of presentation time. Okay, so that's why I'm inviting you to a special follow-up webinar free of charge, okay, where we can go deeper and walk through more real-world trades examples. So there'll be more case study and such. I'm inviting you to this discovery webinar, unlock the secret patterns hidden in the market, where you can discover seasonal patterns that have repeated with remarkable consistency year after year. You'll learn how to pinpoint high probability opportunities across different sectors and asset classes, and you can have more real case study, okay, a lot more case study, okay, of trades timed perfectly with the seasonal trend, okay. So I'll be doing this webinar next week, okay, next week, 19th of August, Tuesday, Singapore time, 8 p.m. So you can scan the QR code over there, okay, or head over to the link, okay. I believe track record, the organizer have already posted in the chat, okay. All right, so it is inside the link to just register for it. All right, so even if you can't attend, I encourage you to register because I will send you the recording. Anyway, it is free now. Okay. All right. So that's the end of my presentation. Okay. Any question you want to ask me? I think we still have a few minutes of time. Okay. I'm here to answer your question. Thanks, V. Thanks, Tricot.
Thank you very much, Alex. Questions from the audience, please ask your questions in the Q&A tab if you have any questions. So Alex, how long have you been using this seasonality?
How long? Not when I first started trading. So I started trading in 2011. I think it's only within the past last 5 years when I started to look more into the seasonal trading. It brings more clarity to me.
Yep, indeed. Okay, I don't. Oh wait, we have a
In
question
the chat,
here.
all right. If there are certain years with outlier, do you still trust data? What is the number of outliers you permit? Okay. If there are certain years with outliers, what do you mean by outliers? Okay. So basically, like I mentioned, I want to only trade or invest in stocks that has at least more than 10 years of data with 90% win rate, which means that out of the past 10 years, 9 years, it has been winning. So I know that this has a proven track record. Okay, all right. So then I tend to filter whether it is the average profit, is it high or low, that kind of thing. That you can do other filter. So I have a lot more examples and case study. Maybe you want to attend my so-called webinar. All right. Outliers do not conform to seasonality. Okay. I try to exclude those. Okay, I try to exclude those. So I basically just try to filter down, okay, to those that has a very good track record. Yeah. So I try to limit my number of watch lists as little as possible. Yeah. So I do have to trade every single stocks. Okay. I do have to trade like the big cap stocks. There are other so-called opportunities in the mid cap, in the small cap, etc. I hope that answer your question. Helmi can
Yes,
start.
maybe I can interject here. I think Helmi misunderstood when you vocalized his question. He thought you're asking him what outliers mean. But for your information, Helmi, so he's as I understand it, Alex, Alex's method uses seasonality with already filtered out of the outliers, right? So he
Yes.
uses a minimum of 10 years of data. So if 2 years of the data of the 10 years do not conform with any the seasonality that he's looking for, then it's not valid for his criteria already. So let's just say now it's the 10 year, this year he does it, it doesn't work out so well, then the percentage drops. He may or may not, depending on how much data he has previously, exclude it going forward, right? So and another point that he made is that there's a whole universe of a lot of stocks to be looking at, right? So don't look at those that the seasonality is just a bit of touch and go. So no need to look at 70% or less than 80%. His range was 80 to 100%, but Alex's cuts off is at 90%, right? As I believe that's what you said, right, Alex?
Yes, that's right. So I understand that also a lot of people like to always just trade the same so-called stocks again and again. For example, the hot stocks like, Nvidia, Tesla, Microsoft. There are other opportunities out there. So once again, I try to find those with a higher probability, like what V said, at least 90% of track record of the past 10 years.
Okay, we have a question here. Do you trade seasonality like momentum trading?
You can combine seasonality with momentum trading. So once I have the list of stocks ready, I will still need to do some work, okay? Not exactly automated. I still need to go through the chart, okay? I will see which some of the stocks there has a better trending stock, has better momentum. So I see, even though it might have a good so-called seasonal period, but I see the chart right now, it can be a little bit choppy, or that kind of thing. So I will skip that. So I will look for stocks that is more trendy, that has more momentum. Yep. I hope that answers your question over there.
Okay, it looks like we are out of questions. Thank you, Alex. It was
Yep,
very
welcome.
clear. So I guess that's why everybody understood what you say. For those interested to learn more, please sign up for the webinar on Tuesday. There's a QR code there. There's also the link in the chat. Thank you very much for attending. Thanks, Alex, for your time.
Yep, thanks
I'll
for
just
having me
do a
also.
brief wrap-up summary for those who missed some sessions so that you know what's going on. For those who have questions, please contact info@trackrecordtrading.com. There's a QR code for you to scan. You can join us at our next webinar about on how to create your own day trading system, where Alex Kozulin will give you a step-by-step guide on how to create your own day trading system with reference to his creation, the Day Trader Pro, which has been very successful over the past 2 years. Thank you all the speakers for attending. Thank you, Alex Kozulin, Lachlan, Mekin from Go Markets. And for those who are interested in Go Markets free 3-month subscription of TradingView, I know that I am. Please email us for the information on how to get a code. Otherwise, you can also click the link earlier in the chat. But if it's too hard to scroll, just drop us an email. We will drop you all the details. This offer is for Go Markets existing account holders or new account holders, right? So it's free of charge, and you get more benefits, more functions within the TradingView platform. Thanks, Mike Spiff from Trader IQ. He has a follow-up webinar as well. We will tell you the dates in our recording email. And to Steve Ruffley of steveruffley.com on telling us how to interpret news and data. And finally, Alex Yeo for telling us about educating us on seasonality. And he has a follow-up webinar on Tuesday. Thank you very much for taking the time. The recordings of the various talks will be sent to your email by Monday, and the registration links will also be in there. But if you have any questions, don't hesitate to contact us through our email or social media platform. Just to repeat and sum up, join us for the track record, create your own day trading system on this upcoming Thursday, 21st of August, 7 p.m. Singapore time, 9 p.m. Australian time, 7 a.m. Eastern Standard Time. And see you soon. Take care and bye-bye.